ATS presents the Realty Debate, powered by Tata Capital, with Manisha Natarajan.
A very happy Deepavali to all of you. Well, it's an auspicious day which brings good fortune and prosperity. So we are going to focus on just one thing. How can you make money off real estate? Well, we do know, yes we know, that the property markets across India have slowed down and have been, well, to put it mildly, down in the dumps. In some markets there is even distress. But we urge you to remember just a couple of things. It wasn't that too long ago that several, in fact most drawing room conversations were about real estate and how much money so-and-so friend or relative has made, or one boasted about how much money you had made in buying great property. Number two, check out the wisdom of any big investment guru, and they all have one smart advice. A distress is the best time to hunt out for good deals and make money if you've got the acumen and the patience. So on this Diwali special, that's what we are going to focus on. We have 50% of India's household savings going into real estate. How do you make the most of it? I'm joined by Sanjay Dutt, Executive Managing Director, South Asia, Cushman & Wakefield, India. Ruby Arya, Executive Vice Chairperson, Milestone Capital Advisors. Anurag Jhawar, Business Head Consulting Research and Data Labs, PropTiger.com. Gaurav Rakyan, Managing Director, Rising Straits Capital. Nishant Singhal, Promoter and Director, Strategy Investors Clinic. And Arun Agarwal, Vice President, Institutional Research, Religare Capital Markets. Finally, Sameer Jasuja, Founder and MD of Prop Equity. Ladies and gentlemen, well, we will not focus on negatives today, or at least we shall try and keep away from them as much as possible. And I would like all of you to tell us, how do we make money on real estate? Because, you know, as an asset class in a diversified portfolio, Sanjay, you will agree that real estate has to be there, doesn't it?
Manisha, real estate is a big segment of our lives and investment portfolio. It continues to be. I've seen some of the most reputed institutional investors making most of the market, whether it's Blackstone and Canadian Pension Fund or many others who have come in. And there is a merit behind it. They see an opportunity in a market like, in real estate in India. And yes, one may have a different perspective from residential market point of view and from retail investors' point of view, but there is a story. There is a medium and long-term story that this country holds, and that will continue to be the case for next 10 to 15 years. And if the markets have come down, please make the most of it and buy. And if you're an end user, you certainly need to buy. And if you're an investor, then you need to take certain precautions. You need to do some due diligence and market research before you do that, because upside probably may not be in every property and every investment. More informed decision will help you make the right choice.
All right, Nishant Singhal, come in here and tell me, first of all, why have Indians loved real estate so much? I mean, if I look at just the sheer numbers, you see that stock markets have given you probably over a long historical period higher numbers or higher returns in real estate, yet people feel so much more comfortable holding a property.
The reason is very simple. A normal buyer understands real estate much better than equities or mutual funds, bonds, etc.
Does he? Are you sure about that?
Normal buyer understand. That's why, still real estate continues to be one of the largest asset class in anybody's portfolio. Because in real estate, if you go and visit a site, for example, you can understand that area, you can understand the risk around it. If you belong to a particular state, you understand that state, what are the demand drivers, supply drivers, etc. But in equities, the risks are much bigger. I mean, tomorrow, overnight when you're sleeping, something happens in US, and morning you will see equities coming down by 5 to 7%. So it's number one, it is very easy to understand. Second, it is a real asset. So while normal buyers have made a lot of money in equities also, but then when they come down, your wealth comes down by 50–60% in a week, which generally the retail buyers are caught on the wrong side of the markets, which we have seen in 2007, 2010, 2012, and now, for example, whatever correction we saw today. So people still feel that real estate is easy to understand. It's a safe investment. The downside is limited. Today we are discussing prices have come down, there are unsold inventories, etc., etc. But people who bought properties like 5 years back at 2,000 rupees per square feet in Noida, or maybe 3,500 rupees per square feet in Gurgaon, are still sitting at handsome gains.
Okay.
So, yeah,
easy to understand. Ruby Arya, would you agree that real estate is easy to understand? I mean, you can go look at the site, look at the location, find out how far you are from connectivity or the closest transport system, schools, hospitals, all of that. And it doesn't take rocket science to buy right.
No, I think real estate is one of the easiest assets to understand. I think everyone, I mean, as you said, conversations revolve around real estate whenever you get to meet people. And why I say so is because real estate provides opportunities for all class of investors. And as Sanjay said, I think sometimes negative sentiments are not the worst times to buy. Actually, I personally feel they are one of the best times to buy. So if you look at what is available in the market right now, if you are a retail investor, you can sort of get into mid-market residential housing, of course in areas which have a lot of social infrastructure and are employment driven. If you have, say, a surplus of 1.5 crores, investable surplus, you could look at a diversified portfolio of risk-adjusted returns by partnering with a debt or mezzanine platform with pretty much low fee structure and skin in the game. And if you have investable surplus of 15 to 20 crores, then I think you have multiple choices. You could probably go in for pre-leased commercial, and I must say that one of the things is that a lot of equity money will now start into moving into pre-leased commercial. We've already started seeing it, and that is one of the best buys right now. It is, you know, you can get in at low capital values, earn a stable yield, and for the yield return, a lot of HNIs are preferring that.
Okay,
on the other side, you could also get into...
We'll come back to what are your top picks right now. It's just let's start with an overview of what's really going on. Sameer, I mean, you wanted to make a point there.
A bit over here.
I
think real estate was a very easy asset class to understand.
Okay.
Not anymore today.
Why?
Earlier there was a demand-supply mismatch with more demand and less supply. Today the tables have turned, that there is exceptional amount of supply and very less demand. That's the main reason. The second biggest reason today is that if you look at the pricing 5 years ago was really affordable across cities. Today the pricing over the last 5 years has run up so much that, you know, affordability has really come down compared to what it was from an end user perspective. And end users also drive real estate markets, and that is what has been witnessed, that end user driven markets have done better than investor driven markets because they've just come down. Having said that, I'm not saying real estate continues to be a great asset class, and the biggest reason being there's an underlying asset and there is a rental opportunity that you get from an end user perspective, that he can put his apartment on rent and get a rental yield month on month, and he always has an asset to sell. And that way real estate is a better asset class to invest into. But as far as the understanding of real estate is concerned, is now getting more and more complicated, and I could say as complicated as equities would be in today's market context.
All right, Gaurav.
I don't agree.
Okay.
Even today, you know, say till 2 years back, nobody knew unsold inventory, stock of 48 months, 60 months, okay? And
by the way, you, Nishant, better give us credit for making that a popular term. What is unsold inventory?
So newspapers,
literally, I think Sameer and the real estate show, property show at NDTV has made everyone aware of what unsold inventory is.
So newspapers have been writing about unsold inventories, etc., for last 2 years. All channels are talking about it. But if you ask a normal buyer today that in New Gurgaon, what is the unsold inventory level, nobody knows. What people go and see is, if I am going and seeing a project, are some factories come around it, are some job opportunities getting generated around it, is some highway or an expressway getting constructed. So I don't agree that people today understand what is demand supply. A buyer who buys a apartment or a plot doesn't care about what is the demand supply situation.
Okay,
however,
okay, let's get that debate on. Gaurav Rakyan, let's bring him in as well. He has a point to make. Gaurav, would you agree that nobody, I mean, even investors really don't look at the numbers? We may want to believe that they take very informed, scientifically culled out, data-backed decisions, but the fact of the matter is they're pretty much led by A, the location, and secondly, the sentiment of what's going on. 5 brokers telling him it's a fantastic buy, and you know, somebody's just made 20% returns in just 6 months, been able to flip it. That's what drives it.
No, I think, you know, yes, real estate was simple. You know, but people didn't know what was reason, what was the reason for the, let's say, the abnormal price increases, that the sector has witnessed. So while, so clearly you don't buy residential real estate for yield. India has probably one of the lowest residential yields in the world. Okay, yes, you are buying residential for appreciation, and the appreciation kept happening, but nobody knew why the appreciation is happening. I mean, the unsold inventory levels were still pretty bad, let's say even 3 years back. But yes, it was investor sentiment. So I think, real estate was easy because people believed that, you can keep investing and the prices will keep growing. I think right now is the market. Investors and end users have realized, rightly so, that this is a sector where you need to do much more diligence, before making the making the investment decision. You study the market, you look at unsold inventory levels, you look at, at the end of the day, what will drive growth here. And then, you can probably also now take comfort from the fact that if there are institutional investors who have backed some projects, retail investors can take cues from that also. Okay. So a project which has strong financial partners, strong construction partners, good contractors, good PMC, these are cues that a retail investor should look at before making a real estate investment decision.
All right. Anurag Jhawar, where do you stand on this discussion that real estate is either an easy asset or an easy asset class to understand or not?
So, to my mind, real estate is something which is essential asset. It's needy. It's easier said to acquire. There are a lot of complexities involved which someone needs to kind of master. While for an end user, I would say that essentially if he's taking care of the legal risk and he's kind of aware about the construction schedule and track record of the developer, he should be okay. But from an investor perspective, this is becoming more and more, I would say, there are a lot of loose airs in the, loose balls in the air, where someone has to kind of understand at what price point someone has to enter and what price point someone has to exit. Because of the demand supply situation, as Samir rightly mentioned, it's more of from a demand, from a time when the demand was high. Today we are at a situation where supply is high. So it's easy said, but I think there's a lot of steps required to kind of understand it better.
Okay, so let's come back to a couple of things that we are going to discuss. Best markets. What are some of the picks in micro markets across India's top 8 cities, ladies and gentlemen, that you would think is good from an end user? The fact of the matter remains, Sanjay, and I'm going to come to you now, that even if I'm an end user, real estate being the heaviest or taking away the largest chunk of my savings, it is a backup. It is literally a retirement plan. I have seen so many retired or people who have retired actually selling off their asset which they've held, pocketing the money and moving either to a smaller location, and that actually becomes a big retirement fund. So that capital appreciation requirement or need remains, whether it's an end user or an investor, doesn't it? So how do you pick the right micro markets today?
I think if you look at the demand very carefully and you look at the economy of this country, there are certain sectors which are really driving the demand. You spoke about the top 8 cities. In these 8 cities, IT and ITES is one of the biggest demand driver. There were banking and financial services, pharmaceutical, telecom, e-commerce, and few other sectors which are also driving demand. But when you look at the real common thread across all these sectors, with the exception of banking, more specifically to investment banking in Mumbai, which has a very high price point affordability, majority of the sectors are basically providing employment to people who are in the mid segment and lower mid segment. And from that point of view, if you're a retail investor, you would invest in mid segment or affordable segment, which basically means in the popular suburbs and the suburban outer periphery, where the affordability is the key factor and delivery is good, and therefore volumes are high. So I think that is the segment to invest in.
Anurag, you want to take a go at some of the best performing markets you think from an investor's point of view?
Right, Manisha, so distress is a very good time to kind of take a bet, and to my mind, there are few ingredients which are very important for any market to be kind of picked up. So one is obviously the livability score has to be good, and second is the overall inventory overhang has to be in a reasonable level. And the third is obviously there should be liquidity in terms of demand and supply. So we at Data Labs, we pick couple of markets across cities. So I will just throw some names around. So in Bangalore, Tanisandra and Hennur, these are markets which we feel that will do well going forward. In Chennai, Tambaram and Manammakkam, which is the ECR link road, should do well. Similarly, in Pune, I think Hinjewadi, taking cue from Sanjay, IT-enabled demand, prices haven't increased too much over the last 2.5 years, should do well. Similarly, if you look at city of Ahmedabad, I guess it's largely an affordable market itself, but within that, South Bhopal and the Vaishno Devi Circle on SG Highway, these should do well. Then you talk about Kolkata, I guess Rajarhat, they haven't seen too much of pickup, should do well going forward. So if you look at all of these pockets, there are three important things. Livability index is high, more than 70, I guess, out of 100. Your inventory overhang would be probably less than 24 months. And the prices haven't increased too much. So I guess these are the areas which someone can look at.
All right, okay, so you've given a long list, but I can see that either Anurag is just leaving the northern cities out for the Delhi panel here. So anybody in Delhi wants to take a call on which are going to be some of the best markets, Gaurav?
So I think, you know, on a very generic basis, if you look at the track record of real estate, you know, if one were to invest in, let's say, a project which is nearing completion or is completed, I would say, you know, you can go for any market and, you know, it's a pretty good time to buy. However, if you want to take execution risk and you want to buy at an early stage, I think, you know, the markets where developers are in a healthier position, or where, let's say, the average delay in completion of projects is lowest, which is, let's say, markets like Bangalore and Pune, those would be the markets to buy. Whereas, let's say, NCR and Mumbai, you know, would be slightly high risk markets because, let's say, the health of developers is not as good as it is, that of the South developers. And the track record as far as, completion of projects has not been very good.
Okay. All right, those are some really good tips. Either buy nearing completion and negotiate a good deal there. If you're getting into early stage, healthier position, developers would be better. In that case, Bangalore and Pune are way better than NCR and Mumbai. Nishant, he's quietly waiting. I'm wondering what's brewing in Nishant's mind.
No, I completely agree with Gaurav, and my advice is primarily for the end users. Go for projects. So one sector in real estate where the demand is more than supply is ready to move in units. So go for units which are either ready to move in or are coming up for possession within next 6 to 9 months. Don't go for 18 months, 24 months, etc. Ready to move in or within 6 to 9 months. Look for areas where some good infrastructure is about to get operational in next 12 months. So there are various projects which have got significantly delayed, like Dwarka Expressway, KMP, etc. But there is a possibility that they are coming up in next 12 months or so. For example, today there was news about Golf Course Extension Road that will be ready in another 6 months. So ready to move in, closer to possession, something which is close to a big infrastructure development area. Those are the areas where buyers should look at, and especially in ready to move in, I think the price correction is much more than the units which are under construction. Discounts are more than at least 10% higher in case of ready to move in units, because developers have already invested in land and construction and they want to get out of that inventory faster than the inventory which is under construction. So go for ready to move in. Another advantage for ready to move in or something which is coming up for possession is that you can rent it out at 2 to 3% yield, which will immediately bring down your interest, net interest cost to about 6%. If you assume mortgage cost at 9.5% or 10%. So just go for ready to move in. You keep yourself away from execution risk.
Just to add to, the point that Nishant made, and, while customers now start analyzing data more and more before making a buying decision, one of the things that's not really analyzed very deeply is people talk about the absolute numbers of unsold inventory. It's very important to dissect the unsold inventory based on completion status.
Yeah.
So when you look at the unsold inventory of under construction projects, let's say, to Nishant's point, projects which are more than a year away, yes, the unsold inventory levels are very high. But it's equally important to look at the unsold inventory of completed units. And what you'll observe is that even in markets like NCR and Mumbai, the percentage of completed units which are lying unsold is still low.
All right, Sameer, sum it all up. I mean, so spot out the markets, you've got the data, put it all together. What are the markets to buy into, and what kind of projects should one buy into?
So, I would like to add to what Gaurav said, that, there is what Gaurav said was partially right, but then you also have a lot of investor-driven properties that have got purchased, which are coming back into the market, and there is no way to capture that inventory. So that inventory number can also be very high. And that's exactly what is happening in markets like Noida and Dwarka Expressway, where all the inventory that was sold out much earlier to investors has come back into the market. So it is a science, and it's very complicated that way. Even ready to move in, because projects are now getting ready. But one point that nobody's even spoken about is Hyderabad. That market is doing exceedingly well today. The gap between tier 1 cities and Hyderabad with respect to prime properties, say in Gachibowli and High Tech City, I would say they're still 40% cheaper, equivalent properties in Bangalore or Pune. So that is one micro market that I would easily go blindly and see a big upside coming there.
Okay, so that was one of the hidden gems. We'll come back and get more of our experts to comment on some of the hidden gem markets that one could look at. Stay with us. There are many ways to turn a profit with real estate, and that's what we are focusing on this Diwali special.
ATS presents the Realty Debate, powered by Tata Capital, with Manisha Natarajan.
Welcome back to our Diwali special on how do you make money in real estate in a downturn. Well, to begin with, you can take a few steps. As our panelists have said, you can buy low, and that, of course, is a really good way to make money. So our panelists have said, look at the price, 4,500 to 5,000 rupees per square foot, ranging to 15,000 depending on the market that you are in. So affordability is a very key factor. Also the difference between a project that you're buying into and ready projects already trading in that market, if that's substantial, then that's another place to put your money into. So many things. Rental income is another thing which was mentioned by one of the panelists, saying, hey, look, this, if you buy a ready property, you can also set it up for rent and bring down your EMI. Leverage, I don't think anybody has talked about leverage. Really, when you're buying a home, how much of your money is going up front? Only 10-15% now. You have, and the rest of it is leverage, which also actually increases your returns, plus you get some tax benefits on interest. So I've done a very hard sell on property now, so I'm going to bring in the panelists. So Ruby, hidden gems in real estate. What are some of the names that you would be happy to pick out? You were the one who started the, gave us some names in Worli, but are there other markets across India that you think are worth investing in?
So I think both markets and developers, I think you will have gems everywhere, because I think it's a ecosystem which mutually coexists. And if you really look at the hot picks and, what the hidden gems would be, so in Mumbai, it would be probably the central and western suburbs. And there's so much of infrastructure which has happened, all across central and western suburbs under construction is a good pick. If you ask me, Bangalore, I think on the ORR between Hebal and Bannerghatta is another very, very good pick. On Chennai, I would say that the start of OMR and not necessarily the end of OMR is where one can sort of bet into. On the NCR, I think the panelists have already spoken a lot. On Hyderabad, I don't know. I mean, I have a mixed opinion, but commercial is really catching up, and probably for a fund house, we would want to get into a Hyderabad market probably a year from now. So I think these are some of the picks. In Pune, I would sort of go into East Pune and, more IT-driven, Kharadi, Hadapsar, which is close to airport and also close to center Pune. So I think these are some of the hot picks that I would sort of, talk about. And when it comes to developers, I think the list is long and the list, keeps changing. So if you look at North India, I mean, there was a time 10 years back where the only developers were probably, Unitech, DLF and a couple more. But in the last 5 years, if you see, there are developers who've started small. And probably if you look at it, we worked with ATS, which is operating only in NCR, and they've done such a good job of timely execution, delivery, and actually delivering to the customers. So I think this is what one will have to bet on. I mean, how many business cycles the developer has seen. And I think over and above everything is customer centricity. I think the developers will have to be customer centric. We will have to provide the product that the customer wants at the right size and the right product configuration that he wants. Of course, the choice of micro market is not always in the developer's hand because he is constrained as far as land is concerned. But some of the hygiene factors like corporate governance, financial discipline, transparency, and especially how he's behaved in a downturn is most important because that's the real acid test.
Absolutely.
I mean, a developer who survived in the downturn is the person that one should bet their money on, and it's not difficult. I mean, any retail investor can do that homework and very much ensure that we are putting our monies in the right project and with the right partner.
Okay. The only thing which I'm concerned here is, Gaurav, you may want to come in here, that this is a big downturn. So there's been one downturn earlier and we know the guys who could not deliver. Some of them names are very obvious. But this downturn, do you think we're going to see many more, calamities?
Yes, I mean, I think the calamities will definitely be there. I mean, as is what happens in every downturn. I think what is good is that, since you were talking about, hidden gems, real estate is a sector where, let's say, having a legacy or having a track record is not necessarily a plus. The more number of projects, I mean, if I talk about a market like NCR, the more number of projects you've done, the more unhappy customers you have, the more projects you have which have run into delays, etc., etc. It's a good time for new players to be coming in the market, learning the lessons that, learning from the mistakes that other players have done, doing smaller projects, doing projects which, with lesser leverage, maintaining financial discipline, having, let's say, a payment structure where as opposed to taking 90% of the payment on structure, you take only about 50 to 60% payment on structure.
Right.
Doing all the right things, and then only one project which you will deliver successfully and on time, can make you a rock star.
A rock star. In fact, Nishant, isn't it true, especially of the NCR, maybe not Bangalore. Bangalore, the big developers and the small ones have actually done a great job. But in NCR, you've had the hardest fall by some of the biggest developers and some of the smaller, newer ones. And Ruby's mentioned ATS, there's Gorsons, who have a very good delivery record. There's Best Tech, which has a very good delivery track record. Sare Homes is doing a good job. Do you believe that the ones who've come without legacy have a better chance of actually turning out to be the big stars of tomorrow?
I completely agree. I think the revival in NCR market is going to come up with delivery. Okay, so if in next 2 years, developers like Supertech, Amrapali in Noida, Vatika, Space, M3M, IREO in Gurgaon, Puri on Dwarka Expressway, if these guys overall deliver about 100,000 units over next 24 months, this delivery is going to revive sentiment in the NCR market that developers will deliver. And when that sentiment, starts moving up, you don't need money in NCR market. What NCR market needs is delivery, because I mean, you can take 5 names, top 5 names, would have sucked out more than 150,000 crore of investor wealth over last 5 years and haven't completed projects. That money is stuck. Okay, so if top 10 developers like ATS, etc., take this responsibility that we will deliver about 100,000 to 125,000 units in NCR in next 2 years, you will see a big revival in NCR, and it will be a big surprise for people.
Sameer, would you agree that I think the biggest thing which would revive sentiments is delivery in the NCR market, MMR market, and Bangalore has always been a stable market. I mean, there is an excess supply which will get absorbed. Their developers are really smart. Launches have come down the maximum as per your data, which we discussed in our previous debate. So literally is these two markets, the MMR and the NCR market, which needs to revive on sentiments.
Well, I'm not too sure about just giving delivery will revive the markets, because that will lead to a huge oversupply situation. And that is my big cause of concern, that with the kind of supply that has been sold, if that really comes into the market, if that leads to pricing coming down substantially, then yes, you could see revival of the market. But I have my doubts on that just pure delivery will lead to revival of the markets in a big way. Having said that, I think every market now today has to be looked at from a demand, supply, infrastructure and social infrastructure, and many other parameters have to be judged before you can see and find hidden gems in the market. But I think what is the prime driving factor today is I would say demand, supply and upcoming employment generation and the infrastructure. And those three data points have to be studied, researched in a very big way by a retail investor, even if he has to take the right decision.
All right. I think we're going to conclude here, hoping that this next 1 year remains a buyer's market. Let affordability come back into real estate and let people get good deals. Why not? I think it's time that the next 12 months remain a buyer's market and everybody is able to negotiate well and find a great real estate. Ruby, Sanjay, Anurag, Gaurav, Nishant and Sameer, very happy Deepavali and thank you so much for joining us today and of course making this show, the Real Estate Property Show, a big success on NDTV. Thanks so much. All right, of course, we've still not discussed one important aspect. We're not done yet. What about real estate stocks? They have been completely knocked down. Is anybody interested in them? Is anybody buying into them? Are there any recommendations? Well, it's Diwali. We have to talk about stocks. We come back and focus on just some of the big picks that the markets are betting on when it comes to real estate stocks.
ATS presents the Realty Debate, powered by Tata Capital, with Manisha Natarajan.
Welcome back. Well, the stock markets have done quite well in the last 2.5 to 3 years, barring the last 6 months. If you take that away and take the longer term returns, they've been 11 to 12%. But real estate stocks have missed most of the broader market's rally. Once big daddies like DLF Unitech are now languishing. But there are new stories that investors like. And no Diwali Special can be complete without some good stock buy options for you. So let's get you the picks of Arun Agarwal, Vice President Institutional Research, Realty Capital Market, who's actually bullish on 3 real estate stocks at the current prices. Arun, a very happy Deepavali. Let's start with which are the stocks that you think can be a good buy in the real estate basket at the current prices.
Okay, so before we start talking about these stocks, the broader sense why we are talking about these stocks is from the residential perspective, my sense is that we have not really seen too much of deliveries happening in residential zone for some time now, and at the same point in time the price rise expectations are not going to be there for at least a few quarters from here. So that would ideally mean that the pre-sales is going to be tough for any developer for that matter. But in these kind of situations, generally the stronger brands, the builders who's having better execution skills, who have the capacity to ensure that the buyers are comfortable dealing with them, they should be able to do better sales and better volumes versus the others. Now, taking lead from this, the 3 key stocks that we like the most in this space, and then in that kind of a scenario is Godrej Properties, Oberoi Realty and Ashiana Housing. So discussing all of them one by one, Godrej Properties, a very strong brand, has been able to execute their properties, whatever they have launched, most of them are on time. And the biggest benefit that they are gaining right now is that you have presence in 5 different key cities,
and in one or the other quarter, one property you launch and you are able to get a good response in those locations. Second one is Oberoi, again a very strong brand. They've been able to execute their projects very well, have got a niche on their own. Whatever they have launched, they've been able to garner better response than most of the other developers in Mumbai, and hence my strong sense is that with a strong balance sheet and a great brand, they should be able to continue, better than expected kind of numbers, operational numbers from here onwards. The third one is Ashiana Housing. In case of Ashiana Housing, in whatever market they are present, they have executed their projects very well, generally delivering everything on time. People are happy with their properties, of the maintenance and the kind of comfort that they have provided to their customers. And the second biggest advantage is that they are dealing in the comfort homes, which is kind of sub 55 lakhs category, which should have a very huge demand as and when you see the economy recovering. So from that perspective, again, Ashiana Housing also should be able to garner great response to their properties, should be able to improve their volumes. And my strong view is that in most of the real estate companies, specifically those who are dealing in residential, the volumes are going to be the key triggers for from the stock market perspective.
All right, so those are some of the stocks from the real estate basket. Not too many people are betting on real estate stocks at this moment, but if you look at property per se, there are some hard, basic ways of making money. Fortunately, those basics haven't changed. So, good employment generation locations, right location with good infrastructure and at the right price, and you won't go wrong. Thanks so much for joining us. Here's wishing you a very prosperous year ahead from the entire team of NDTV Property. Thanks.